Hello, everyone. Welcome back to our webinar session for corporate tax. My name is Faiza. I'm the tax director here at Crest Cooper, and I will be taking you through the previous lectures that we have been doing in this series. And then our managing director Mahar, he will be taking you through the current topic. So in this slide, you can see the lectures that we have undertaken till now on this series. So we've till now done 15 sessions. We started these sessions when the corporate tax law was came in December, and we have then in depth discussed a lot of topics since then. And we will continue this series till more and more cabinet decisions and executive regulations come out. So till now we've had 15 lectures, and we have given an overview of the corporate tax law when it first came in December. Then we discussed in detail about the resident and non-resident taxable persons, who are the exempt persons, out of scope persons, what is UAE source income. We discussed the history of permanent establishment and the conditions for it. We discussed about corporate tax registration, the application of the corporate tax on partnerships, on free zones, on family foundation and trust, how to calculate the taxable income from your accounting income to tax income. We discussed the unrealized gain and losses on assets and liabilities, what are the deductible expenses allowed under the law, what are the interest capping rules, the general rules and the specific rules. And then in last month and a half, there were a lot of cabinet decisions, ministerial and federal decisions that had come out, giving more clarity on the law. So we had discussed that in detail in the last topic. So here, for recap of the lecture one, this was where we had discussed, in a high level, all the different provisions for law, and then we had discussed about taxable person. So there are three kind of people: exempt person, which we will discuss later; the out of scope people, taxable person. In the taxable person, we have resident taxable persons, where they are companies. If they're controlled here in UAE, then all the worldwide income will be subject to corporate tax here in UAE. If there is a company incorporated out of UAE but is controlled and managed here from UAE, then again the worldwide income will be subject to tax and corporate tax will be applied to it. Any natural persons who are conducting business in the UAE, they will also be in the ambit of the corporate tax. For non-resident persons, if they have a permanent establishment here, then the income which is attributable to that permanent establishment will be again taxed here in UAE. And for any UAE sourced income, like we just saw that a cabinet decision came out that they are not required to be registered, but they'll be withholding tax, which will be applicable on them. But at the moment, the rate is zero. Can you change the slide, Mar? Then we discussed about exempt persons. So as you can see, there are certain categories of persons who are classified as exempt person in the law. And recently in last month, we saw that the four categories: the government entities, the government controlled entities, persons who are engaged in extractive business, and also the non-extractive natural resources business, they get automatic exemption, meaning they do not have to apply a register for corporate tax if they're meeting the condition as laid down in the law. And this they had confirmed through the ministerial decision. Then there are other kind of exempt persons who need to take approval, like the qualifying public benefit entities, the qualifying investment funds, the public or social pension fund. They do not get automatic exemption and they have to take approval. And for this, we have also seen a current decision that had come out of giving them the timeline on when they have to register and then when they have to apply for exemption, which we will discuss later on. Then in lecture 4, we had discussed about out of scope persons. So any natural person who's not doing any business in UAE, they are not included in the corporate tax. If there's a foreign permanent establishment of a resident person who have opted not to consider income expenses, then they will be out of scope. If there's a non-resident company who has no PE here, no UAE source income, or no nexus in UAE, they will not be in the scope of corporate tax. And others, like we will discuss in later on, the transparent partnership funds, they will not be included. Now, UAE source income, we had given some examples about the income that's coming from sale of goods or from provision of services, from contracts, from the income from movable or immovable property, disposal of shares, use of intellectual or intangible property, interest that is meeting the condition that we had discussed later in another lecture. So all these are examples of what is UAE source income. So for permanent establishment, we discussed the history, that is, the concept came about in 1985, and the permanent establishment concept was discussed in our consultation document when it had come out in January in 2022. And again, the same, it was discussed again when the law came out. So any fixed or permanent place in the UAE, where the person or the companies are habitually exercising the authority to conclude or negotiate contract, those will be included as permanent establishment. There are some exceptions if they are just ancillary nature business, or if have a warehouse for storing or displaying goods or keeping stock, those are excluded. So there are certain exceptions, and we might see a cabinet decision later on this with giving more clarity. Then we discussed about the corporate tax registration. So we saw that there was a guide that came out of how to register. We have seen in the MarTax portal that the taxable person can see a corporate tax icon there. We know that a lot of companies were invited by the Federal Tax Authority for the first wave of registration for them to test out if registration is going smoothly. And some companies through the cabinet decisions were also given a timeline on when they are supposed to register, which we will discuss later. So then in lecture 8, we had discussed the application of the corporate tax on partnerships. So they can be unincorporated partnership, which means that they're established through contracts, they don't have a legal entity, or an incorporated partnership, which is through an entity, legal entity. So if it's through a contract, they are treated as transparent. That means that the partnership is not going to be under the ambit of CT, but the partners, they will be liable. And in incorporated, if the liability of the partner is unlimited, again, they will be treated as an unincorporated partnership and transparent. If they have a limited liability, then the partnership is going to be subject to CT the same way as other judicial company will be. And same for foreign partnership, it will be the same treatment as being followed in the foreign country, and it's just the same as local partnership. So for application of the free zones, this is a very hot topic. I think a lot of people are waiting for a new cabinet decision to come out on this or executive regulation, because there's not much clarity. At the moment, what we know is that qualifying free zone person, if he is driving qualifying income, that qualifying income will be subject to tax at 0 rate. And any non-qualifying income will be subject to tax at 9%. So what here we are missing out is what is the definition of qualifying income, which we are still waiting for a cabinet decision for that. Then we had discussed the corporate tax application on the family foundation, on trust and foundation. Again, it is like if it's a legal entity or it is unincorporated created through contracts. So if it is a legal entity, it's opted and approved to be an unincorporated partnership, it will be treated the same, transparent. If it is not opted or not approved like an unincorporated partnership, then it will be like a normal company and treated as such. If it's created through contracts, unincorporated, and it has no legal personality, again, it is going to be transparent and treated the same way. And for foundations, it is also the same. So here we had discussed more in detail the family foundation, that what it means. We can switch the slide. Then we had discussed how to compute the taxable profit, how to go from accounting. We know that from accounting profit, we have to do certain adjustments to reach it for the taxable profit, and whose financial statement will get audited. That was not clear in the law. The word audited was not used, but lately a cabinet decision had come out, which has said that if it's a qualifying free zone person or any company which has 50 million revenue, they will need to be having an audited financial statements. The adjustments which we need to do is for unrealized gain losses, exempt income, intergroup transfers, non-allowable deductions, any incentive tax relief will be applied, and then we will arrive to our taxable income. And then we discussed in our lecture 11 about gain or losses, about the different various treatment. Next. Then we had discussed what is exempt income. So exempt income, not to be confused with exempt person. So exempt income is the exempt income of a taxable person, and they've defined on what is that exempt income. So it's dividend and other profit distribution if you receive from a resident, a judicial person, or dividend or other profit distribution if we have from participating interest. The condition being that it should be a 5% holding for at least 12 months, and the applicable rate should be 9%. Any other income we receive from a participating interest, if it's an income from foreign permanent establishment, if we have opted, the condition being if you've opted for the foreign, opted for it, and the foreign tax rate is at least 9%. And also income from non-resident person, if they're operating ship, and then if they have the same treatment being offered to the UAE counterparties as well. Then we had discussed in our lecture 13 about deductible expenses. In that, we had discussed that any expense which wholly is used for business purposes is 100% allowed. If it's not used for business purposes, and we'll discuss in the next slide, which are not allowed at all. And if they are common expenses, they will be proportionally allowed. So next. So this is the example of what are the non-allowable expenses. So entertainment, if it's more than 50%, not allowed. Losses if they're not related to business, any expenses related to exempt income, non-business expenses like we discussed before, any donation, grants or gifts, fine, penalties, bribes, dividend, profit distribution or benefit if it's paid to an owner, and corporate tax that's imposed, any recoverable input tax already taken in your VAT returns, if there's any tax which is imposed out to you. These are all non-allowable expenses. Then we had discussed in detail the interest capping rules. So these rules do not apply on banks, insurance companies, or business by natural persons. And for others, we are still waiting for this cabinet decision where they're going to give a threshold for this interest capping rule. Whatever the threshold is going to be, if it's below that threshold, then we can claim 100%. If it is above the threshold, then it's going to be 30% of adjusted earnings before interest, tax, and depreciation and amortization, and the rest can be carried forward for 10 years. The specific rules were for loans that are borrowed from related parties, so they are generally admissible if you can prove that there was no tax advantage to gain from this, and that generally we can prove if they're paying a corporate tax rate of 9% or higher than that, and they'll be inadmissible if they are a profit distribution or share capital redemption or capital contribution or from any acquisition from existing or potential related party. Then in the last lecture, we had discussed the various, like I said, cabinet decisions have come out in a month and a half. So we had discussed about what is the amount, the threshold. So like we said that in the public consultation document, they had given a threshold of 375, but when the law came out in December, they had not mentioned any amount. They have now confirmed that it is the same amount. Then the cabinet decision came out 37 on qualifying public benefit entities. There's a list that which are the entities which are included in these or can be qualified as these. Then there was an exception from tax registration, which I discussed in the previous slide, that there are 4 categories which are accepted. They do not need to apply from the exempt person. The government entities, government control entities, the natural resource business, extractive business, and there's one more that they had included in this exception, which is a non-resident who does not have a PE here and only drives the state source income. So that was included in that. Then there was one circular came out where the government entities can treat all the businesses as single taxable person. Then we have on small business relief. This is the topic which Mahar is going to discuss today with you in detail. Then another minister decision had come out on who are required to be preparing the audited financial statements. And they are the qualifying, like I discussed in the previous slide, they are the qualifying free zone persons and people who have 50 million revenue. There was one that came out on how to change the tax period if you want to align and make it into a tax group. The tax deduction timeline had been given in one of the decisions where it's 3 months from closing of business. And then there was a provision for exemption from corporate tax. These are the people who we were talking about before, an exempt person who do not get automatic exemption and they have to apply for it. For this, like I said before, the timeline has been given for qualifying public benefit entity. They have to register by 1st of October of this year. And for the others in that category, they have to apply and be registered by 1st June of 2024. And then they have 60 business days where they have to apply for this exemption. And government is going to also maintain a record of if they meet this condition annually. I will leave you here with that, and Mahar is going to now take you through in detail about small business relief. Over to you, Mahar.
Hello, Faiza. Thank you very much. So, hello guys. Our today's topic is a small business relief, and we are going to discuss what is small business relief. We'll discuss in detail what is the threshold, what is the objective of introducing a small business relief, and a lot of other things related to this as well. So, Small business relief, as I discussed, the core objective was just to support the small businesses, and a specific Article 21 has been given in the UAE corporate tax law. And the mechanism, under this mechanism, any resident person may elect to be treated as not having a derived income any specific during a tax period. Basically, they have given the threshold. If the income of a taxable person is below threshold, an option has been given to the taxable person, then they can opt as a small business leave. And in case they are opting it to as a small business leave, then they will not be liable to pay any corporate tax. And it will be assumed that the person has not derived any taxable income during the tax period. One area that remained unclear on the issues of UAE law was the revenue threshold and conditions. What are the related conditions? What is the revenue threshold for the business to be declared as a small business leave? In this regard, as Ms. Faiza, she has already mentioned that ministerial decision number 73 of 2023 has already been introduced, and this gives us in detail and it gives us clarity about the small business relief. So what has been given in the Article 21 of the UECT law, they said a taxable person, that is a resident taxable person, may elect to be treated as not having any and not having derived any taxable income. But this, the revenue of the taxable person, there is a threshold. They said for this, there are two types of conditions. One condition is the revenue of the taxable person in the current period and in the previous period is below threshold. Second condition was the person meets all other conditions specified by the minister. For the first 21, now they have given the basically threshold as well, that we'll discuss in our coming slides, where this clause 1 of the Article 21 is applied, but there are some exemptions while calculating the income. It has been given in the Article 21A, where it says the revenue of the taxable person for the relevant tax period and previous tax period not exceeding a threshold. This is the most important thing. We cannot say that the person's relevant person previous income was beyond threshold. Now the income has come down and they can go for the small business leave. They cannot go because both of the condition needs to be fulfilled. They said in the relevant tax period and the previous tax period does not exceed a threshold. So both of the conditions, if these both of the conditions are being fulfilled and the person is meeting the conditions as specified by the minister, then the person can avail for a small business leave. While calculating the income, the exempt income will not be included in this. Reliefs will not be considered. Deduction as specified in the chapter 9 of the decree law will not be considered. Tax losses will not be carried forward, and Article 20 will discuss in detail. These will not be considered while calculating the taxable persons while applying the clause 1 of the Article 21 of the law. So authority may specify the necessary conditions as well, and they have specified the conditions. As I mentioned, these for the small business relief, these will not be applied, as I mentioned in the previous slide, that exempt income, reliefs, deduction, tax loss in Article 55, these will not be applicable while applying the Article 21 of the law. And these are exempt income. We know this exempt income is a dividend and the profit distribution, participation exemption, foreign permanent establishment exemption, non-resident person operating aircraft or ships in the international transportation. So these are all subject to various conditions, and this is exempt income. It will not be included in while calculating the taxable income of the relevant person. Transfer within a qualifying group and business restructuring relief, it will not be applicable. Article 21 of the law 21 will not be applicable on this. Deductible expenditure, interest expenditure, entertainment expenditure, and non-deductible expenditure, Article 21 will not be will not be applicable on this as well. Tax loss relief, transfer of tax losses, limitation tax forward, and transfer pricing documentation requirements. So Article 21 subclause 1 will not be applicable on all these provisions of the law. So what is the revenue threshold of a small business? It has been provided that the taxable persons earn revenue in the current period and in the previous period maximum up to 3 million. So if any taxable person is there, they are earning, as I mentioned earlier, they are the earning income more, assuming in the last tax period the income was more than 5 million. In this period the income is 2.5 million. They cannot go and opt for a small business relief. Condition must be fulfilled in the previous period and in the current period. If the revenue is maximum up to 3 million, they can opt for the small business relief. So this revenue will be calculated as per the application of IFRS, International Financial Reporting Standards, and generally accepted accounting principles. So these two basically regulation, these two principles will be considered while calculating the accounting income. Moreover, in the I mentioned threshold, if The persons having income more than 3 million, then it will be considered a normal resident, and basically not a small business relief person. The normal provisions of the law will be applicable up to 375,000. There will be 0% corporate tax. Any income beyond 375,000 will be subject to tax at 9%. And the important thing, it has been given that is that this small business relief will be started on or after 1st of June 2023, and maximum it will be applied on or before 31st December 2026. Means if the small business, even they are earning income less than 3 million after 2026, right now there's no clarity that a small business relief will be provided to them. Maximum, they said it will be maximum up to 31st December 2026. As I mentioned, this is not applicable on qualifying free zone persons, and this is not applicable on the multinational enterprises. The multinational enterprises has a revenue of more than around 3 billion globally. If this is a multinational enterprise, if this is a qualifying free zone person, we know what are the conditions for the qualifying free zone person. These conditions are that the person maintain adequate substance in the UAE, not elected to be subject to CT, derives qualifying income, and complies with the transfer pricing rules and documentation. If these four conditions are being fulfilled, person is resident in the free zone, then it will be considered a qualifying free zone person. And these provisions of the law qualifying, these small business relief provisions of the law will not be applicable on the qualifying free zone person, and these will not be applicable on the multinational enterprises having a revenue. Definition of multinational enterprises: the enterprises that have branches, subsidiaries across the border in different countries, having all over the world, I mean, revenue more than around 750 million euros, which is almost equal to 3 billion dirham. So if the company, if the group has a revenue more than 3 billion globally, and any of the leg of the group is in the UAE, even the revenue is less than 3 million, still the entity cannot opt for a small business fee, because the entity is a part of the MNE group, multinational enterprise group. Moreover, the important thing, whenever the businesses will avail the small business review, there are some limitations as well. Something they will not be able to do, this specifically carry forward of the losses, specifically interest provisions. Like we know this, the losses, the entity can carry forward their losses for unlimited period of time. But they said if the person is availing a small business leave, then the any loss for that period specifically, it cannot be carried forward for the future periods, and any loss for the previous period cannot be adjusted in the current period. These are the limitation for the losses. And in the same way, they said interest as well. If the interest for the current period interest, we know this, that the interest under the interest capping rule, that 30% of EBITDA can be claimed, remaining can be carried forward up to further period of 10 years. But if the person is availing the small business leave, then they will not be able to carry forward the interest for this specific period for the remaining year, and the previous period interest cannot be adjusted in the current tax period. These are the two key limitations. Let's just look into this example. This is a company ABC. In the first case, the company having a loss of 10,000 in 2024. The company meet the 3 million conditions, and they can elect for small business leave, and they have elected. Once they have elected, the previous period loss of 10,000 they cannot adjust in 2025. But in 2026, if they are not availing for the small business leave, they can adjust the losses. In the second category, the company, the similar company has a loss of 10,000 dirham, meet the threshold, but they have not opted for the small business leave in 2025. If they have not opted for it, then they adjust the previous period losses of 10,000. The same day, the company C, the same company has the previous period losses of 10,000. The company doesn't meet the condition. The company is not availing any small business leave. For sure, they can adjust the previous period losses in the current period. But if the same company is opting for the small business leave in the future, then this 10,000, if any remaining, it will not be adjusted in the respective tax period. But the core thing, as I mentioned, two things are very important. If the company is meeting the threshold, company is opting for small business leave, their condition itself for the option. But once they are opting, then the losses for the previous period will not be adjusted in the period in which the company is opting for the small business leave. And any loss in the period in which the company has opted for the small business leave, this loss will not be carried forward as well. In the same applicable for the interest. This interest, I've already discussed with you, the same thing like applicable for the losses, like losses will not be carried forward, interest will not be carried forward. Previous period losses will not be adjusted in the same previous period, interest will not be adjusted in the current tax period. So artificial separation, there is a possibility might be one group have multiple transactions. The group is segregating the transaction and showing the income below 3 million for each and every entity. Once they are having income less than 3 million, then they can go and they can opt for a small business leave. But we need to consider, we need to keep in mind that the anti-abuse rules are there. If the anti-abusive rules will be applicable, if the anti-abusive rules are applicable, then they need to look into either in a commercial sense for degrouping, either a commercial sense of segregating the entity. Are there any genuine reason, any financial organization economic reason for this? If there is a genuine reason, commercial sense is there, then they can segregate, they can deregister the group and bring the revenue of each entity less than 3 million. Otherwise it will be considered overall a group entity will not fall under the small business relief. We need to consider all these things. Might be a lot of people are planning, they need to segregate the group, day group, bring the revenue less than 3 million, and need to take the advantage up to 31st December 2026 for the small business leave. You need to keep in mind their general anti-abuse rules will be applicable. In short, we can say what is the summary of the discussion specifically related to the small business relief as discussed. If the entity has a revenue of less than 3 million for the current period and the previous period, entity has a right to go and opt for the small business relief. If the entity is opting, it is being approved, and it will be assumed that the entity has not any taxable income during the tax period. The entity will not be liable to pay any tax, but it doesn't mean the entity will not be liable to register. Entity will liable to register, but they will not be liable to pay taxes. Losses for the current period cannot be carried forward. For the previous period, losses cannot be adjusted in the period in which the entity is claiming a small business leave. The same treatment will be applicable for the interest as well. These rules, these small business relief will not be applicable on the qualifying free zone person. These will not be applicable on the M&E group. We have discussed M&E group having a turnover of around 3 billion. So this will not be applicable on this. Moreover, while applying the while applying the subclass 1 of Article 21, it will not be applicable on exempt income. It will not be applicable on various expenses. It will not be applicable on various other things that we've already discussed in detail. So you cannot artificially segregate their business as I requested you earlier as well. So this is over from our side. Thank you very much for your time. In case you have any question, you can approach me. You can approach Ms. Faiza. Emails are given here. You can approach any of us. I really appreciate your support. Thank you very much. So if you have any question, you can ask your questions. We are ready to listen. We are ready to understand. We always deliver. You can contact us on a landline number. You can drop us an email on a given email address at info@chriscooper.com. Thank you very much. Just we are looking into your questions. Okay, I wish to know if it is mandatory for a trading company based in a free zone but not actively trading, no business owner having investor visa to register for corporate tax. Registration is compulsory for any business which is in the free zone. And if they are earning qualifying income, it will be subject to tax at 0%. Non-qualifying income will be subject to tax at 9%. As you mentioned, your trading company, you are just keeping it for visa purposes. Still, you will be liable to get your entity registered. Once you are registering, you will be liable to submit the return as well. It doesn't mean it might be your zero income as you mentioned, but still you will be liable to submit the return as well. Next question is, you are going too fast. Okay, next time I would be careful. I would be moving ahead very slowly. Okay, next is, kindly share the detail of the YouTube channel. Okay, we will send it to you. You can search Chris Cooper on YouTube. For sure, you'll find it. What is the deadline? Corporate tax is applicable starting from 1st of June 2023 on or after for the financial period starting on or after 1st of June 2023. Corporate tax will be applicable. So if your financial is starting from 1st of June, corporate tax will be applicable from 1st of June. If this is 1st of Jan, then it will be applicable from 1st of Jan. There are no deadline for the registration specifically. Anytime you can get yourself registered before the submission of the first return. So we need to register before June. Okay, if you can you can get yourself registered, but there's no specific timeline as I mentioned earlier. Ali Beg is asking on the slide showing that example for tax loss carry forward limitation. I got confused with the 2025 comments about company C. Please elaborate. I just wanted to highlight, instead of going into the slide, just look into this. If the company is making any losses during the period the company is availing small business leave, that losses will not be carried forward. And any losses which the company has carried forward from the previous period, it will not be adjusted in the period in which the company is opting for the small business relief. 3 million revenue means turnover or profit. 3 million is the turnover, and while calculating the turnover, we should not include the exempt income. As I mentioned, subclause 1 of Article 21 will not be applicable. Even when no business, no activity, still we need to file an annual return for trading company in the free zone. Yes, you are right. So any other question, you are most welcome. Okay. Okay, guys, thank you very much. Thank you very much for your support. Thank you very much for joining us, and have a lovely evening. Thank you very much, Faiza. Take care. Thank you very much. Thank you. Bye-bye.